What's up, Facebook? Ty Crandall here with Credit Suite, and today we're talking about business credit reports. We're talking about business credit scores. We're talking about the things as business owners you should know that are on your business credit reports and the scores you should know that appear on your business credit reports, because these are the exact same things that your prospects, your clients, your competitors, suppliers, any lender and credit issuer that's even thinking about getting you money are looking at. They're looking at your commercial credit reports, whether you know it or not. And that's the biggest problem that we see, is that in the consumer world, somebody needs your permission to pull your business credit report or pull your personal credit reports per a law called the Fair Credit Reporting Act. But in the business world, nobody needs your permission to pull your business credit reports. Nobody needs your permission to pull your commercial credit reports. So as a result, all kinds of people are looking at your commercial credit reports right now that you probably don't even know are. Your prospects, your competitors, your clients, any of these people that want to can pull your business credit reports, as well as suppliers, lenders, credit issuers, all the people you would suspect are pulling your business credit report to make all kinds of credit and lending issuing decisions. So what's on these credit reports? Well, there's a bunch of different kinds of scores. There's all kinds of data. There's all kinds of things that you're probably not used to being on your consumer credit reports. So today we're going to dive in, we're going to decode this, and we're going to look at the things that are actually on your business credit reports, the scores that are on your reports, how all of this works, so you can access your reports, you can make sure that they are up to date, they're accurate, and you do the things that make sure you have the best scores and profiles to make yourself more lendable and to make sure that you have and look reputable and credible to all these people that have access to these reports. So let's dive in. So today, we are talking about, what you got to give it to my whiteboard artist, that is a pretty cool graphic I was just looking at earlier, where she got the details of the numbers on the safe. Today we're going to be decoding your business credit reports. We're going to be unlocking the safe here to go through your reports and your scores with all three of the reporting agencies, so you know what you need to know to control these reports and scores to make sure you can have the best scores and reports to make yourself more, to make sure that you can get the most amount of credit at the best terms, and to also make sure that you have what's needed to make you look credible for all those other people, the prospects, the clients, the potential partners, the potential investors, all those people that are going to be looking at your reports. So let's dive in. So Dun Bradstreet. Now Dun Bradstreet, many of the things you need to know right away is right here. Dun Bradstreet, you've got to have your DUNS number, which is one of the first steps in getting set up with them, and 3 payment experiences or 3 accounts reporting to them to give you an actual PAYDEX score. Thanks for joining us. So a lot of people ask this question: I have credit, why isn't it reporting to DMV? I just told you why. In order to have something report to DMV, you have to make sure that you have 3 payment experiences, and you have to make sure you have your DUNS number. If you don't have both of those things, you will not be issued a PAYDEX score. You will not have a credit report populated. Very different with Experian and Equifax we'll talk about, but with them, you definitely need to have that. Now, they have 2 different kinds of scores: predictive scores, and they have what's called performance scores. Now, with predictive scores and performance scores, Jerome, welcome. Thanks for coming in. So predictive scores predict your risk of future default. Performance scores gauge your previous performance, okay? So what happens here is predictive scores predict your risk of going default, taking into account a bunch of different factors. Performance scores actually come in, and performance scores let you see how well you've performed in the past. It's based on past performance versus predictive scores that are predicting your risk of going late in the future. So when you're looking at Dun Bradstreet credit reports, there's several sections on these credit reports you should know about. First is your identifying company information. Company name. This is the officers of your company. This is your, what they call the family tree of if you have other branches or if you have a corporate headquarters. All of that's in this identifying section. They also have public records. So this is anything that they actually access from public records. Okay. Now what's interesting about this is in the business world is lawsuits are on there. We're not used to that in the personal world, right? But judgments, tax liens, even lawsuits will appear in this section on your Dun & Bradstreet report. Jeffrey, thank you. Thank you for the thank you. I appreciate that. Delinquency predictor score. Now, this is interesting. Remember, I just taught you that there's 2 kinds of scores. There's predictive and there's performance. I also taught you that you have to have a DUNS number and 3 payment experiences with 3 accounts reporting to Dun & Bradstreet to get a PAYDEX score. So let's look at these 2 scores: delinquency predictor and PAYDEX. The PAYDEX score is basically a performance score. It's based only on how you've paid in the past. Okay, whereas the delinquency predictor score is a predictor score. It's predicting how they think you will act in the past. So there's basically two scores that Dun Bradstreet have that are directly relating or directly telling a credit issuer or lender how they think you'll pay your bills. There's PAYDEX, which reflects how you have paid your bills in the past. And again, we're looking at this delinquency predictor, which predicts based on past payment performance how they think you'll pay in the future. Okay, it basically predicts your chances of being paid late or basically going 90 days late over the next 12 months. Now, there's also a financial stress score, and this basically is your chance of business failure. Okay, what can happen if your business fails? Okay, and Deshauna says, do you have a link that takes me to cards that I need to get started with building my business credit? Well, you can go to our YouTube channel and youtube.com/credit suite, and there's a lot of videos that will tell you that. Our actual finance suite system does link to every single credit issuer and the links to apply, but that stuff changes so often we probably don't have videos that give you the direct link. But if you go to our YouTube channel, we have videos that will actually give you those sources, and if you search, you'll be able to find links to actually apply with them. Kim, welcome. Thanks for coming in. So the financial stress score is your basic risk of claiming business failure, of going bankrupt. That's what this is. So anytime you see financial stress offered by the reporting agencies, what this means is it means your risk of going under, your risk of defaulting, your risk of going bankrupt, your risk of basically closing your door. Now they have a credit limit recommendation, okay, and they have a conservative recommendation how much credit you should be issued and an aggressive recommendation. Here's how this works. You need to know that all reporting agencies have a recommendation of how much credit you should be lent. Okay, that's what lenders and credit issuers are using to determine how high the limits and loans are that you're actually being issued. It's not the only factor, but it's a main factor. So how do you control this? Well, you get credit and keep using the credit. A lot of people think that building business credit is about building business credit. It's not. It's about getting credit you actually need to grow your business and using that credit. It's the using of the credit that gets you higher and higher and higher limits. And here's why. The more credit you get, the more credit you use, the higher the recommendation of credit from the reporting agencies, which means that lenders and credit issuers then lend you more money. So business credit's not about building business credit. It's about getting credit you actually need to grow your business, using that credit, and the using of that credit, and the more credit you're accumulating, those are the factors that tie into this credit limit recommendation. And the higher the credit limit recommendation, you got it. That means the more credit that you're actually going to be issued by credit issuers and by lenders as well. What happens if, and Key says, what happens if you happen to actually pay late? Well, let's look at that. So if you pay late, a lot of these scores, like PAYDEX score from Dun Bradstreet, basically the score depicts how late you are. So for example, the question is how late may you be? Let's say you're 14 days late on average on all of your accounts. Well, then you'd be issued a 70 score. Let's say you pay bills as agreed. You'd have an 80 score. Let's say you pay them early. How early you pay would get you a 90 to 100. Let's say you pay your bills 50 or 90 days late. That would give you a 50 score. So to answer your question, how late you pay is what determines how late your score will be, or how low your score will be. Now also remember, there is a predictive score too that will predict your risk of going late in the future. The later you are, the lower that score is because the greater risk you have of going late in the future. Remember, these scores depict your risk of going late in the future, 90 days late. So the later you pay, the lower the score. That's the answer. Now remember, you have a 30-day grace period with business credit. It's not like consumer credit. Late is late. The first day past the payment due date, you are late. So unlike consumer credit where you can go 30 days before it's reported, in the business world, 1 day late starts to lower that score. So how late you are determines how low that score will actually be. Great question. So also on the report is a DMV rating. Now this takes into account how you've paid your bills in the past, your PAYDEX score. It also takes into account, classifications for your company based on size, based on the net worth or equity. So let me teach you A lot of people do not know, and it's a game changer. It's why you want to tune in here today, because what happens with this score is that you can control it. You see, DMV takes into account your financial data per your tax returns. It's your choice whether you want to send them your tax returns or not. If they don't have your tax returns, here's what you need to know. They default and judge your financial health based on the number of employees you have. Yikes. That's scary. That means even if you have a financially healthy company, but few employees, that can be held against you. So two things to learn from this. One, if you have decent tax returns that show that your revenue is increasing, that show profits, send them to Dun Bradstreet. That will put you into a classification indicating that they have those tax returns. It'll also help your DMV rating, which is the #2 credit score that's used by credit issuers and lenders that Dun Bradstreet offers. Second, be consciously aware of the number of employees that you're putting on your annual reports. When you're asked with your Secretary of State how many of your employees you have, you may not even think about what that may mean. That directly translates to what this DMV rating is if they don't have your tax returns. So be aware consciously of when you fill in how many employees you have on your annual reports. That can tie into what your DMV rating is. It can be used to judge the financial health of your business. And if you don't want that to happen, then you've got to send the tax returns and give them your financials. Otherwise, they will always default to that. So two really cool tips that can help you control the second most common score used by DMV. Now, Lamont says, if you were late and then started paying on time, how long would it take to get back? Good question. Let's look at this. So if you were late and then you started paying on time, how long would it take you to get back? Here's what's beautiful about this. It's based on averages. Guys, thank you for the like. If this makes sense, give me some likes, give me some shares. Let's get some more people in here and let's share this with other people. So Lamont, great question. Here's what it comes down to. This is based on the average of how you pay, right? So here's the secret to not letting 1 or 2 late payments hurt you is to get more accounts. The higher volume of accounts you have that you are paying as agreed, the less the impact of the ones you're not paying as agreed will affect you. So it's all based on the average of how you pay on all of your accounts. So the key is to get as many accounts as you can, pay as many as you can, and then even if you're late on 1 or 2, the impact to your score will be minimal because you have so many others that are paid as agreed. That's why you want to build business credit and have more payment experiences. It raises the recommendation of credit you have, and it also makes it easier for you to make mistakes, go late, and not have much of an impact on the score because the rest of your payments are good and paid as agreed, so your average is much higher. Okay, so Kim says, Dun & Bradstreet, I have a company worth $243,000 under my Duns. When I try to apply for a credit card, the credit card company denied my request. They might have. They probably did, and here's why. Because what do you have reporting on your Dun & Bradstreet credit report, and what type of credit are you applying for? So here's the problem. You can't just go to your bank and get a credit card unless you have 14 or 15 accounts reporting on your Dun & Bradstreet credit report. So they very well, the value of your business doesn't matter. What they're primarily looking at is the number of accounts you have reporting. So if you have more accounts, the more credit accounts that report, the easier it is for you to get approved for more credit. If you go to your bank, banks won't even touch you without a personal guarantee or credit check unless you have at least 14 accounts reporting. That's probably the issue, is you don't have the number of accounts reporting. And Jeffrey says, so on net accounts, when should you pay the bill? As soon as you can. As soon as you can. Uline and Quill, do not let you and I pay until, well, let me clarify it this way. Don't pay until the item ships. The item must be fulfilled in order for it to count as credit. Otherwise, it counts as cash. So if I go to Quill today and I buy something today and I pay immediately, even though I use credit to buy, they still consider it cash because I paid before they ship. But the minute Quill ships, I pay. The minute Office Depot ships, I try to pay, they won't let me. They make a statement be populated before they'll let me pay. So some sources won't let you pay as soon as the item ships. Some might make you wait till the bill is populated. So what I do is I check back regularly until that bill populates. The minute the bill populates, I pay the bill. So the simple answer is pay the bill as soon as possible. Jack says, is a PG required for all business credit cards? A PG is required on 0 credit cards. None. Credit cards are the easiest thing to get without a personal guarantee. Look, loans, not as easy to get without a personal guarantee because of what we're talking about today. Because they're pulling your business credit reports, and your business credit reports have all this data, all these other scores that lenders are looking at. Credit issuers are primarily looking at how many trades you have. So if you follow the right steps to build business credit, you get some vendor accounts that report first. You get store credit. You move up to revolving cash credit. You can get all of that kind of credit without a personal guarantee. So for example, Jack, all of this credit was required without a personal guarantee and a credit check. Almost all major retailers, BP, Apple, Amazon, Shell, Sam's Club, Dell, even auto vehicle financing at places like Ford and GM, they all credit without the personal guarantee, without the personal credit check. They may all ask for your social. Doesn't mean you have to give it to them. So for example, if I go to Office Depot to apply right now, they'll ask for my social on the online app. But I can go right at the top of their application, select to get to fax the app in, and their paper app does not require that. So again, what's nice, it's getting darker. So what's nice is that yes, they may ask for your social, but it doesn't mean you actually have to provide them your social security number, okay? The bottom line is that if they ask for your social, fax the app or call in your application, then you won't have to provide the social, okay? So you don't have to supply the social security number, but when you do, there's typically a personal guarantee and a personal credit check, just so you know that, okay? Michael says, I have the hardest problem trying to get business credit cards without a PG. I have over 22 accounts open under my tax ID. Well, again, it depends on which accounts you're applying for. You know, you're applying for Visa, MasterCards. Which ones aren't you getting approved for? If we have more specifics there, that could definitely help. Okay, so back to the topic at hand. So we talked about DMV's PAYDEX score. It's based on 0 to 100, based on how you've performed in the past. It's also using what's called a weighted average, okay? Michael, thanks for coming in. So what this means is it means the highest limit accounts you have a higher weight into your average score. So if you are going to go late, which some people asked about, always go late on the lower limit account. That will have less of an impact to your PAYDEX score than the opposite if you go late on a higher account. You also will see on your DMV report what's called a SIR rating, Supplier Evaluation Rating. This is a scale of 1 to 9, and it's, again, your chance of ceasing operations in the last 12 months. Well, we just talked about that same thing being a financial stress score. Well, this is specifically for suppliers, okay? What they're looking for, what this score is actually coming in and asking for is the SIR rating is saying, hey, look, if you're a supplier, what's your risk of going default? What's your risk of me giving you money for supplies and then you defaulting and running off with my cash, just so you know. So Jack says, they said it's required due to the Patriot Act. Have you read the Patriot Act? I have read the Patriot Act. The Patriot Act does not require your social security number being supplied on applications whatsoever. It is required in places like opening a bank account for verification purposes. As a matter of fact, there's a brand new regulation that just took effect in May that some banks need to get your social just to verify your identity. But it doesn't mean there needs to be a personal credit check and guarantee. And every source we've called, only 3 of them are even complying with the new regulation. So the Patriot Act does not at all require a personal guarantee or personal credit check. Don't take my word for it. Do what I did. Read the Patriot Act. It does not require that. Some banks, when you open bank accounts, will need to identify who you are, but credit issuers and lenders, per the Patriot Act, absolutely do not. Jeffrey says, Amazon won't let you apply for a net account without a social. How do you get around that? Actually, Amazon's accounts online, if you're using the correct link, don't even ask for your social. Amazon's account, if you're going to the right link, gives you 2 places. They give you the option of applying without a personal guarantee and a personal guarantee. And right on their application page, they tell you, you have a better chance of getting approved if you do supply the personal guarantee. If you're established, you can move forward without the personal guarantee. And without the personal guarantee link, if you choose that option, they don't even ask for the social security number. Okay, so that being said, we talked about the SIR rating, we talked about the DMV rating. Remember, this is based on financial data. It takes your financials into account. Now, it's this ranking scale here of 5A to HH, which might not mean anything to you, but remember, it's based on the tax return data you supply, or the second thing is it's based on your company size, okay? So it's based on your net worth first, if they have it, per your tax returns. Second, it's based on the number of employees that you actually have. So DMV, this is the main stuff that you need to know. Public records, identifying information. There's a delinquency predictor score. predicts your risk of going late. Okay, the financial stress score, your risk of going bankrupt. Okay, the credit limit recommendation, how much money you should be lent. The DMV rating, which again takes into account financial data, and then after that, the size of your business or the number of employees, and that supplier evaluation rating, which is there if you're rating suppliers. Equifax. Okay, very different than DMV. They will give you a profile and the low score even if you have no payments reporting to them. Remember, Dun Bradstreet needs 3 accounts reporting to give you a score. Equifax doesn't, okay? So it's about $20 to monitor. Dun Bradstreet's about $150 to monitor. If you want the cheapest way to get your reports, go to creditsuite.com/monitoring. You can get credit monitoring for only $24 a month with DMV. And with Experian, if you don't use this link through our nav integration, DMV directly charges you $150 and Experian charges you $50. So it's $210 a month to monitor these two, but at this link, it's only $24. Equifax is pretty cheap though, $20 to get monitoring with them. Okay, their reports have scores, public records, credit usage, financial data, credit limit recommendations, the same as DMV. So their main score is called the Small Business Risk Score, okay? This ranges from 101 to 992, and it's for financial services, okay? Now, there's also a score of 101 to 816 for suppliers. So different industries have different kind of scores that you may see here. And again, this is your chance of going severely delinquent or charged off, okay? So it has to do with credit utilization, liens, judgments, bankruptcies, okay? Delinquent payments, any of those type of things. So if we look at this score from Equifax, here's how it basically works. So we can see here that again, it's based on payment performance. A 90 plus means you meet payments as agreed, 80 to 90, 1 to 30 days late, etc. So far, DMV's PAYDEX score, Equifax's credit score are based on how you pay your bills. If you pay your bills as agreed, you get a good score. If you pay them late, how low your score is depends on how late you pay the bill. Okay, that's how their main score works, taking into account delinquencies and judgments and all these other things. So you can improve the score by simply avoiding derogatory items, paying your bills on time. Okay, they also offer a business failure risk score, exactly the same as DMV's financial stress score. It predicts your risk of defaulting in the next 12 months, going bankrupt. The score is 1,000 to 1,880, and again, it's based on all the information that they have on record. You can improve this by, again, making sure that they have accurate financial data, okay? So that being said, you know, and the most important thing with any of the business credit scores to pay your bills as agreed, especially the ones that are strictly based on that. Now, Michael says, Jeffrey, you can get it done. So Michael's kind of helping Jeffrey on that. I have an Amazon account without a PG. Jack, a lot of them do. As a matter of fact, guys, look, Amazon is one of the easiest accounts to get without a personal guarantee and credit check. Thanks for the likes and thanks for the shares. It means a lot, guys, because that's what gets people in here to spread the message. Guys, Amazon is one of the easiest accounts to get without a personal guarantee. They're one of the only credit issuers that when you go to apply for their commercial accounts, give you the option of applying with or without a PG to make it even easier. And their no PG offer doesn't even ask for that social. Okay, Michael says, is there anything we should be doing using to monitor aside from built-in app, which I love tools? Not really. Remember, when it comes to business credit, one, monitor the number of trades you have. That's what determines how quickly you can continue to build business credit. But it also helps to have the full reports and know these other scores depending on what you're doing. If you're just applying for credit cards, knowing your PAYDEX, knowing your Equifax small, knowing the main scores is all you really care about. But when you get to applying for loans, you need to look at your full report. You need to see what your DMV PAYDEX is. You need what your DMV rating is. You need your financial stress score. Lenders are looking at all of that data. Your credit reports have your revenue. They have your profits. They have the number of employees, your SIC code. You need to review those things from time to time just to make sure that they are accurate and up to date. Dave says, got my DMV number last month. Congratulations, fist bump. In less than a week, they are getting faster. So that's awesome. Sometimes it takes a month. So I can call Office Depot or Staples and do the application over the phone or have it printed. Yes, you can. Here's the deal. don't even bother unless you have at least 5 to 8 accounts reporting. They won't approve you. But if you go online to their commercial applications, at the top of their application, you can click a link, download their application, fill it out, and fax it in. When I apply for Office Depot or Staples, I go in and I apply right by the phone, and that's how you get approved. Even if they don't ask for your DUNS, give it to them. It'll give you a good chance of getting approved, okay? And again, as Michael was alluding to, you can go to Office Depot and Staples early on and apply and get a net account, but they won't give you a revolving account unless you have at least 5 to 8 trade lines reporting, as almost all credit issuers will. So that's a great point that Michael makes. Some of these sources like Office Depot and Staples, I'm telling you, do not apply until you get 5 or 8 accounts reporting first, because I'm trying to get you their revolving credit card. But you can go and without those number of trades, even Amazon, and get the net account. The question is, do you want 30 or 55 days to pay, or do you want it to be revolving? If you want the revolving accounts from these guys, then you need to build some vendor credit first. You need to set up your business credibly, as we've talked about in the past. You need to get initial credit with places like Uline and Quill and Granger. Okay, you need to get at least 5 accounts. Then you start moving on to Amazon, Staples, etc. If you skip this and you don't have 5 accounts, most stores will deny you. Some, like Staples, may approve you, but it'll be on net terms. It won't be on revolving. Oftentimes, they'll just deny you if you don't have credit reporting. This is why you need to make sure that you have that credit reporting. Now remember, DMV won't even give you a report and score without 3 trades. Equifax will give you a low score even if you have no payment services. They will give you a failing score if they know you exist, which is why you can't hide from business credit. You need to start getting accounts at reporting and doing it fairly quickly. So let's look at Experian. They, like the Equifax, will give you low scores even if you have no payment experience. If you ever look at your credit report or ever denied by a lender because of business credit quality, look and see. Oftentimes, you can come in and realize that you have a 27 to a 29 score out of 100, even when you have no credit reporting. Here, I'll show you how to figure that out. Go right here. creditsuite.com/reports. There's a free search you can do with all 3 reporting agencies. When you do this free search, one of two things is going to happen. Either one, and I'll try to show you real quick, nothing will pop up at all. Nothing will show up on the actual search. Okay, the second thing that may happen is that your company will pull up, but it will show that you have trade lines. Or the third thing that can happen is that you will actually come in and show up and it will show that you have no trade lines. Here, I'll show you exactly how this works right now. I'm going to go to creditsuite.com reports. So if you go to creditsuite.com reports, you're going to see this page on our website. You can choose which reporting agency you want to come in and do what with. I'm going to go to Experian. I'm going to do a free search to see if Experian knows I exist. My name is already here. I don't need to enter my city. Another scary thing about business credit reports, just so you guys know, 2 things that you learn really quickly by this section and this section alone. First, nobody needs your EIN even to pull your business credit or to issue credit in your behalf or report credit on your behalf. That means even if I know your business name and your business address, with those 2 things alone, I can report credit. How you pay bills to me, I can report. I can also access your business credit reports as well. I'm trying to figure out how to turn this line. I can also access your business credit reports as well without your EIN number. Okay, so it's important to know. I'm able to pull up a company record here. All I need to pull up a company record is the company name and the company state. That's it. And look, the other thing, they're giving you the option right away of looking at your company's report or somebody else's. So it's super simple for anybody to get data on your business, even if they're not you. So once you do a search on this page, one of 3 things is going to happen. You can see they're selling us credit monitoring, but here's what the information we need. Credit Suite, my address, I have trade lines. If nothing pulls up, you're safe. If you do this search and this trade lines doesn't pull up, you're not safe. What can then happen is you can then a failing business credit score, even if you have absolutely no business credit. So that's why you need to go to creditsuite.com/reports and do that search. Jack, I can no longer pull with Experian. They don't like the fact that we're in the industry of building business credit, so we don't have that ability like we once did to actually come in and to be able to pull your business credit reports, or I would. Ty, Staples and Office Depot offer a revolving account with only the tax ID. If so, I didn't know that. No, they don't. They typically, if you have less than 5 accounts, let's say you have a credit report started with DMV, Equifax, Experian, but you don't have 5, 6, 7, 8. You don't have enough trade lines to get the revolving account. Yes, Michael, they will give you a net account. They won't give you a net account with no accounts reporting. But if you don't meet their minimal accounts required to get approved, they will oftentimes approve you for a net account. Okay, so Experian, same thing. They'll give you a low score even if you have no payments. Okay, they have a registered owner section, details, your addresses. Again, just like DMV and just like Equifax, they have a section that has your family tree, the ownership of your business, all of those details, okay? So they also will say how fast you pay your bills, okay? They're going to talk about your judgments. Any of public records are going to be on there. The history of your company payment for performance, what they DBT, or days beyond terms. How you pay. How many days are you paying beyond terms? All of that information is on here. Your business background, including your SIC code, is also on here. Any financial data is on here. Your revenue is on here, okay? Your profits, your actual revenue coming in. Okay, and they also offer some credit scores as well. And I'm going to dive in and I'll talk to you about IntelliScore, then I'll show you one of these reports. So your IntelliScore Plus, it typically is based just like this. Now, this is different than Equifax and Dun Bradstreet. It looks at payments, balances, utilization, derogatory items, historical behavior, age, industry, size. It's not just based on how you pay like these other scores. It does take into account other factors like your age and your industry size. But here's what you need to know. Up to 60% is based on how you pay. 15% derogatory items. 10% historical behavior. So if you add those up, you see about 85 of the scores still based on how you pay, even though it takes into account other factors. Now, they do also offer what's called a blended score, which may take into account your personal credit information. Now, remember, the thing here is that per the Fair Credit Reporting Act, nobody can actually come in and pull your personal credit report without your permission. They have to get your permission. So look at the disclaimer before you sign if you ever give the Social Security number, because that could mean they're pulling your personal credit. This is why I say in almost every opportunity you have, never provide your personal credit or your personal Social Security number unless they absolutely require it, and you're guaranteed that they will not do a personal guarantee and they will not do a personal credit check. So here, let me give you a look at some examples of actual reports. I can't pull reports today, but what I can do is review some reports so I can show you some of this information on here that I think can actually help you. So let's take a look at one of these reports so you can see what it actually looks like. So if we come here, here's an example of a company that's given a failing score, but a company that has absolutely no credit reporting. There's no credit. I'm at the end of the report. There's all zeros here. Okay, but they're still issued a failing score. This is what can happen if you have no credit. Here's some information that's on here. The years you've had on file. The actual SIC code of your business. Okay, these type of things. Now, they're also, if they have it, here's what happens when you give them your tax returns. They show your financial data on the actual report. Let's just scoot down. So they show your actual sales here. Remember I told you that's what ties in to their actual, to DMV's score when it comes to their rating. Everyone, Experian, Equifax, and DMV all have a score that has to take into account your financial health, which takes into account your sales data. Remember what I said. If they don't know your sales, they look at the number of employees you have. That's why, especially if you're a lower dollar business, you want to show them your tax returns, because this will help you get higher scores when it comes to financial risk than if they see a lower number of employees. And then we also see plenty of scores. Remember, we talked about this is your score that actually rates your ability or the belief that you may go out of business. This is the IntelliScore that's based primarily on how you pay. Here's days beyond terms, days you're paying late, okay? Derogatory legal accounts or filings, lawsuits, for example, fraud alerts, okay? So these are all the type of things that are on these commercial reports. Okay, here's all different kind of alerts that you can set up. Here's the credit risk score and credit limit recommendation. Okay, so it's also right here. Here's the recommendation of credit, clear as day. So when you're applying for a credit card, guys, this is what they're looking at. Their computers are looking at this data to determine how much you should be approved for. So we see here credit score, risk, and credit limit recommendation. Okay, we see here 74. And then we can see the risk category that you're in. We see the factors that are actually affecting it. So we can see the factors that are adversely affecting your score. You can see payment trends over time, how you've paid over time. You can see your financial stability risk score, your risk of going bankrupt, okay? Trends again. And then an overview of all your accounts. DBT is days beyond terms. How many accounts have you paid beyond the terms? How many times have you paid late? How many trade lines do you have? What kind of actual UCC filing, judgment, tax liens, bankruptcies? All those things are right on your actual credit report. Industry comparison. It's comparing your business against other people in your industry. So they're going to score you based on how you pay overall and how you pay compared to other people in your industry. These are actual accounts you have reporting. Here's a summary. Here's those accounts. Here's something interesting about these reports. They do not say credit issuer name. They say the category or industry they're in. Packaging, Uline, office supply, Office Depot, hardware, Lowe's. They don't actually show you the credit issuer name. Okay, and if you go to dispute any of these, they won't even tell you the credit issuer name. So you have to keep track as you add new credit, which credit issuers you're adding, so you could try to figure out which of these are the actual ones. Here's something interesting about your credit reports. They do not say your limits. They say how late you pay. They say if you're current. They say your balances. They say the recent amount of high credit you've been issued, but they do not have a limit here. Okay, last sale date, okay, payment terms, net terms, credit. So they don't say it. Now, credit issuers see your limits, but you can't. You'll only see the recent amount of credit you've actually used, okay? And there's more of that. Even your inquiries, which don't affect your score, are on your commercial credit. So again, guys, that's what that actually really looks like. I do not know why my phone keeps auto-adjusting for light, but I cannot get it to stay lighter. So here we are. So I don't know, I guess I can't get it to be. So anyways, that is exactly how this works. It's exactly what one of these reports look like. Now, the other thing that you need to know about is the FICO SPSS score, okay? FICO has their own small business score that you should also know about as well, because it pulls data from the business and you as the owner. It pulls together your business data and your owner's data. And guys, here's how this works. It's pretty crazy. What they typically do is credit issuers decide, I'm sorry about the lighting here, guys. For some reason, my phone will not let me lighten this thing up. I'm not even sure it won't. Nope, that did not work. But anyways, okay, so here's what you need to know. FICO SPSS takes into account your business credit reports and scores first, consumer after that. So if you build your business credit, even though FICO SPSS takes into account your personal credit quality, it'll still lead with your business credit quality. Here's the problem. If you don't build business credit with all three reporting agencies, it will then take your personal credit quality heavier into the score than business. If you don't want your business to be judged based on personal credit, you need to build your business credit profiles and scores. Then FICO SPSS pulls all the business data and weighs the score heavier towards your business data than your personal data. But if you ignore your personal credit or you ignore your business credit, then they'll pull your personal data. So that's something that you want to definitely keep in mind. What about a secured business credit card? Sure, you can get them. They're hard to find. Wells Fargo is one of the only ones that's out there that you're going to find that reports to the business credit reporting agencies. A lot of them don't report to business reporting agencies. So FICO SPSS has an overview of your business details, all different types of scores, different kinds of collateral details, financial data, just like we've seen on everything else. And here's how those scores actually work. 0 to 300. 180 is excellent. 160 is the preferred from lenders like SBA or lenders that issue SBA loan. 140 is good and the minimum to get an SBA loan, okay? History, time in business, all those type of things are actually going to come into effect. So, here's what you need to know. When it comes to SPSS, FICO's SPSS score, it's pretty simple. You cannot, it is impossible to have a score. I'm trying to get to where I can get more light because my phone is not letting me light this up. It is impossible for you to have a score high enough to get an SBA loan if you don't have business credit. The minimum score, you cannot get a 140 FICO SPSS score with no business credit. So if you ever want to get an SBA loan, you have to build your business credit because their FICO SPSS score is required to get an SBA loan. They require a 140. You won't be issued a 140 without business credit. So you never want to ignore personal credit. You got to address personal credit. But at the same time, you need to make sure you build your business credit because, again, your prospects, your clients, your suppliers, your competitors, anybody that wants to can see these business credit reports. It all ties in to your ability to get money as well as what all these other people know about you. And it's a necessity to ever get an SBA loan. So Jeffrey Cook, U.S. Bank reports to DMV every 30 days. Awesome. Good to know. U.S. Bank, there's a lot of these companies that are out there. So I'm going to wrap this up. I apologize in advance for the lighting. I don't know what's going on my phone today, but I got some kind of tech issues, it seems like, on every live stream. So I'm going to wrap up. If you missed this, go back and watch in its entirety.